Some rallies are flashy, but others are quiet, happening in dribs and drabs without any focus. I call them stealth moves. The two biggest stealth moves so far lately, JP Morgan and UnitedHealth Group. They've been rallying relentlessly since they bottomed in September, leading two of the most important sectors in the market higher, the financials and the healthcares. These two names are about as close as it gets these days to blue chip stocks. They're well-run companies with good balance sheets that are the most respected members of their industries. Now, in September, both stocks plummeted, with UNH taking out the $215 level. That occurred when CEO David Wickman unleashed a passionate broadside against the Democratic presidential candidates who want to establish a single-payer system and put his company out of business. In September, it looked like Elizabeth Warren was the new frontrunner, and it was, at that time, she was all about Medicare for all. That means no UnitedHealth. So the stock got hammered. As for JP Morgan, same story. Warren wants to break up the big banks, so the stock got hammered as her polling improved. But here's the thing. Money managers really don't have any specific insight about politics. That moment in September when the banks that managed care stocks got hammered, do you know that was now looking like the apex of Warren's campaign? At least for now. And it was their nadir, and it was her apex. I have no idea who'll be the nominee. But I do know that trading off sensationalist political headlines has sure been unlucky and mistakeful. Ever since that moment, JP Morgan and UNH have become the market's leaders, the two stocks that are in the Dow that have become irrepressible. Nothing seems to damage them, even when there's a reason it should, although I do say that this sell-off will, in the end, I suspect, take these two stocks down too. For example, with the Federal Reserve no longer cutting interest rates, do you think a stock like JP Morgan will be under pressure? They're supposed to be hurt by a flattening yield curve. The president's still bashing the Fed, trying to get them to cut rates, even tonight in a tweet. Counterproductive. As for UnitedHealth, this is the kind of stock people flock to when the economy's weak. If you think we've recovered enough that the Fed can afford to stop easing, then you typically want to sell something like UNH. Instead, it keeps climbing, although tonight it pre-announced better than expected earnings. And, of course, this sell-off could get more ferocious, and it would include the stock of UnitedHealth. And some will say it didn't raise guidance enough. Not true, but when stocks go down, people make up reasons. So what do these moves tell us, the positive moves before today? I think the action here has very little to do with the broader economy and a whole lot more to do with the Democratic horse race. You want to know why UNH has caught fire? It's because Warren started faltering in the polls. Then she backed away from the Medicare for all, saying she'd wait until her third year to implement it. In other words, it's not a priority. It probably won't happen. The stock market would love to have a more centrist, business-friendly Democrat run against Trump next year. Then, regardless of who wins, it's business as usual. Wall Street was terrified of Warren, still is. But as her numbers have faded, UNH and JP Morgan have roared higher. Yet, when you look at what's been leading us higher, at least until today, these stocks aren't hostage to the Fed or the trade talks with China or the impeachment hearings. They're all about the polls in the Democratic Party and the primaries. Of course, the polls could change again, but I think the recent action is a lot more realistic because regardless of who takes the White House, the votes for something like Medicare for all or breaking up the banks simply won't be there in the Senate. You don't need to be a keen political mind to know that you just need to know how to count. Although, once again, when gripped with a sell-off like the one I think we are having right now, it just doesn't matter how blue the chip is. Mad Money's back in.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.